What is happening, Bulls and Bears? It is Friday, April 22nd, 2022. Wow, what a week. I did not get a video out yesterday. That's okay. I'm back today. Yesterday was a whole different story. Today, the crash is here. Does it mean prices are going to crash? No, prices are still rising, but affordability has crashed. We're going to talk about what's happening in the housing market today and what we can expect. We're going to talk about the city that's likely going to be the first city to see falling home prices. Now, I'm not predicting a crash, but as mortgage rates rise, if mortgage rates are allowed to stay high and even go higher, then we will see some definitely deceleration in prices, but not only that, declining prices in many cities. So hopefully we'll still see this hands-off approach and rates will rise to a more normal level. Let's go ahead and start right here, though. Let's talk about the personal savings rate. The personal saving rate has crashed. We've got a recent chart that we want to show you here. The stimulus checks are long gone, and the cost of living is taking a bite out of the average U.S. household. Take a look at this. The personal savings rate had spiked at the beginning of the health crisis and the shutdowns. And of course, we saw the stimulus checks. We saw the spike in the personal savings rate after each stimulus check. Well, this was just updated a few weeks ago. We are below now. We're staying below where we were prior to the health crisis. And in fact, we're still over a five-year low in the personal savings rate for American consumers. Well, what does that tell us? Well, one thing it tells us is that this near record low unemployment number that we are being shown is phony, because if the unemployment landscape was so wonderful, why has the personal savings rate crashed now to more than a 5-year low? Well, the cost of living is too high compared to incomes, of course. But let's talk about the labor force participation rate, and then we'll get to home prices, I promise. And we'll look right here at the number of people not in the labor force also has not recovered. We saw this big spike around the time of the health crisis, dropped down a little bit, but we're still way above where we were pre-health crisis. Now, if you go back for decades, of course, you'll see that there's been a steady increase in the number of people not in the labor force. So another thing that reveals how phony this unemployment level is, the official unemployment number. Now, one of the big questions here that I see people down in comments, people on this channel are asking is, how are all these people getting by without being in the labor force? Well, a lot of people had to move back at home with their parents. A lot of millennials. In fact, last fall we reported on a study that showed that about half of millennials are still living at home or moved out and moved back home with their parents. Half millennials. That's a lot. A lot of people are also working cash jobs, so they're outside of the system. They can't be tracked, so they're not counted as being in the labor force. But this cost of living combined with the lower wages is eating into people's savings, and we saw that just the chart we saw a couple minutes ago with the personal savings rate now at more than a 5-year low, and it's not recovering, it's still dropping. Right now, onto the housing market. As promised, affordability has crashed, and there's a certain city that really went up very, very quick in home prices. It's going to be likely the first city to see dropping and falling home prices. Let's take a look at what's happening, though, first with affordability as we see this rise in mortgage rates combined with home prices that are too high to begin with. And we've got a nice chart right here, and we see the yellow line is the mortgage rate, and the National Association of Realtors Affordability Index, a huge drop. And if you look to the far left here, the higher mortgage rates went prior to the previous housing bust. Well, affordability dropped even further. Of course, they lowered rates after the housing bust, and affordability went back up. So here we are, those of us hoping for more affordable homes and just lower home prices in general. We are crossing our fingers that mortgage rates are allowed to continue to go higher. Now let's take a look at a 5-year chart of mortgage rates, and we see that rates did rise back in 2018. Then they had to start dropping them again. And now, of course, we see the rapid rise to the far right here, what we're seeing currently. But let's take a look at what's happening to inventory of homes, right? So when mortgage rates are higher, people have a hard time qualifying for a down payment, and therefore homes don't get sold as quickly and inventory should rise. Well, that's what happened in 2018, and that's what's beginning to happen now. Let's take a look at this next chart here. And the month of supply of homes on the market, again, go back to 2018, the big spike when mortgage rates rose. And look to the far right here, we are on an upward trend. Now, this is going to be updated here, I think, in the next 2 weeks. Hopefully, we'll see another rise in home inventory. Now, what would be really nice is if one of these lawmakers would pass a law saying that Blackstone and investment companies cannot come in and buy tens of thousands of homes like they have been doing over the past several years. And then you're going to start seeing some pretty good buying opportunities in the housing market. It won't crash. Housing markets don't crash, as I've spoken about here several times. But there could be some price declines ahead in the very near future unless they come in and drop rates and do emergency rate cuts and emergency foreclosure preventions. Who knows? But so far, we're definitely seeing weakness emerge. Now, let's talk about the city that's going to be likely the first city to see falling home prices. Well, it's very likely to be Boise, Idaho. And in fact, home prices in Boise are barely in the positive as of the last report. Let's go ahead and take a look at the price chart here. And we see that home price growth now is barely above zero. It's about 0.5% here there in Boise, Idaho. Now, why did home prices go up so fast in Boise? Well, a lot of people left California. They still wanted to be in a fairly larger metropolitan area. Boise's not huge. It's about 250,000 people from what I understand. But it was one of the biggest destinations for people leaving the high cost of living. And a lot of people in California sold their homes, and they took a huge amount of equity that they had in their homes and went up and bought homes for cash, or at least had big down payments for homes over in Boise. And that upset a lot of people that were Boise natives when they saw the home prices shoot up, and it made all their taxes go up, and they were not happy with Californians invading their city. But yes, home price growth nearly stalled to zero in Boise, one of the first cities that we're likely going to see declining prices if they keep mortgage rates where they're at or let mortgage rates go even higher. Now, a couple people down in comments on this channel were predicting or had said that mortgage rates were going to go to 10%. That would be amazing, and that would be truly a turning point for the housing market. Probably falling prices like we've never seen. Will they go that high? I doubt it. I think they're going to start cutting rates here, probably as we start seeing weakness in the housing market and in the stock market. But hey, they could just bring this whole market down, and the people that are holding cash, we're going to have some great buying opportunities. But here's the thing. We just saw the savings rate at the beginning of this video. A lot of people are not holding cash. A lot of people are taking on massive amounts of credit card debt just to get by. So a combination of rising debt, crashing personal savings rate, and that means when the home prices do come down, a lot of people are not going to have a good enough credit score because their debt's going to be so high, and they're not going to have any down payment because the savings rate is plunging. So it's going to be a lot of cash buyers when home prices do come down. So think about that. If you're someone looking to buy a house, will you be in a good position to buy a home when prices do come down in the housing market? Because if you start getting behind on your payments and your credit card debt goes out of control, your credit score is going to take a dive, and good luck qualifying for a mortgage. So if you're a cash buyer, you're likely going to see some buying opportunities if what we're seeing here continues. So we're going to wrap this up, folks. Thanks for being here. Let me know what you think about Boise. The home prices, will mortgage rates continue to rise and the housing market come down? Let's hope so. What do you think? Thanks for being here, people.